Good day everyone. In today's video, I'm going to discuss the tips in journalizing. There is easy way to make a journal entry, and we just need to take note of the following terms. First, we need to familiarize the chart of accounts. A chart of accounts is the listing of the account names that a company has identified and made available for recording transactions in its general ledger. A company has the flexibility to tailor its chart of accounts to best suits its needs, including adding accounts as needed. Within the chart of accounts, you will find that the accounts are typically listed in the following orders. First, in the real accounts or the accounts found in balance sheet. These are asset, liabilities, and owner's equity. And the other group are called nominal accounts or the accounts which is found in the income statement, and also it could be called as the temporary accounts, and these are revenue and expenses. This is the example of chart of accounts for a small business, and these are grouped into 5. First group are assets. Assets are anything that you owned with value. Sample are cash in bank, account receivable, inventory, supplies, prepaid expenses, land, building, furniture and equipment, vehicles, and accumulated depreciation. Another group are liabilities, or anything that you borrowed, or anything that you owed, or any obligations of your business. And samples are notes payable, accounts payable, wages payable, interest payable, unearned revenue, mortgage loans payables, and bonds payable. The third group are owner's equity. These are the owner's share or contributions in the purchase of asset. Sample, you purchase a tricycle and you give an equity or down payment of 5,000. This is what we call equity, and the remaining portion is called liability or obligations. So the common account title for owner's equity are common stock and retained earnings. Another groups are revenue, or items that your small business will offer to the market. Here you can list the different type of product that you are going to sell. It's up to you whether you itemize that product or you group that product. So if there's only a single product offered, then you can only write sales. The last group are the expenses. Okay. And first is the cost of goods sold, or those items which can be found directly in your items intended for sale. Another are salaries, supplies, utility, transportation, rent, and depreciation. You notice we have supplies in asset, and we have also supplies in expenses. The main difference between the two is that those unused supplies are classified as asset, while those used or consumed supplies are classified as expenses. The second thing that we need to familiarize is the business transactions. These are events that must be measurable in terms of money and that essentially impact the financial position of the business. There are 6 characteristics of a business transaction. It is a monetary event. It affects financial position of the business. It belongs to business, not to the owner or any other person managing the business. It is initiated by an authorized person, and it is supported by source document. Take a look at the sample of business transaction. There are 5 samples that I'm going to present, and we will give a detailed tips on how to make a journal entry of this transaction. But please take note that a business transaction could cause at least 2 changes in accounts. When we analyze business transaction, let's take a look at the fundamental equation of accounting, which is asset is equal to liability plus owner's equity. Now, in dual entry accounting or double entry accounting, there should be at least one debit and at least one credit. And this chart will give us a guide on how you write a debit and a credit accounts. So in this chart, we can say, it guides us that asset has a debit and credit side. If there's an increase in asset, you can list the account in the debit side. While if there is a decrease, we can list that in the credit side. For liability, if there's a decrease, we can record that in debit side. While if there's an increase, we can record that in credit side. Same is true with owner's equity. Remember, the negative sign means decrease and the positive sign means increase. So your record should have at least one debit or credit depending on the nature of the transactions that you analyze. Now let's familiarize the steps in journalizing a transaction. First, we have to enter the date. Then we will enter the debit account, its title and its amount, and then we will enter the credit account, title and its amount, and finally we will enter an explanation. Now let's make a journal entry of the transactions that were presented earlier. First, in September 1, there's a transaction that we deposited 300 peso cash in the name of the business, which is RLO Big Shop. Now, when we analyze the transaction, we can detect that there is an increase in asset of the business. At the same time, there is also an increase in owner's equity in the business. With that, we are going to go back to our chart of accounts and determine the appropriate account title of the asset, and we can consider that as cash. Also, we need to determine the exact account title for owner's equity. And we have only 2 choices, and the best account title for that transaction is common stock. And finally, we can write down the exact journal entry of the said transaction, which look like this, which cash in debit side with an amount of 3,000 and a common stock at the credit side with an amount of 3,000. And you can write your explanation on the 3rd line of the journal entry. Now, let's take a look at the answer of the remaining examples. So let's answer the remaining example. Now, let's incorporate the nominal accounts, which are the revenue and expenses. In this chart, we can see that if there is a decrease in revenue, you can write that or record a transaction in the debit side. While if there is an increase, you can record that on the credit side. For expenses, if there is an increase, you need to record that in the debit side. While if there is a decrease, you need to record that in the credit side. Take note, if you notice, the normal balance side of asset and expenses are the same. So the main reason is that asset and expenses are alike. They only differ on their usage. If it is unused, it could be classified as asset. But if it is used or consumed, it could be accounted as expenses.